How's it going, everyone? Today we're going to be looking at Applied Materials stock. The stock is up 216% over the past 5 years, and we're going to take a look at the financials as well as the valuation of this company to try to get an idea of, is this a buy right now? And it certainly could be. They beat earnings per share in their last earnings report, which was May 15th. They beat earnings per share expectations by 39 cents per share. They missed on revenue. They're below $23 million, below expectations, posting $7.1 billion in revenue. And for this upcoming quarter's earnings, August 15th, they're expecting $2.35 earnings per share, and estimates are $7.21 billion in revenue. And we've had 17 upward revisions in EPS over the last 90 days. But if we take a look at the financials of the company for this last earnings report, they had $7.1 billion in revenue, and year over year that grew. So we're going to compare April 28, 2024, year over year growth. They had $6.64 billion in revenue. They had $7.1 billion in revenue. So pretty good growth in revenue year over year, except they did miss for expectations for this previous earnings report. Gross profit increased from $3.15 billion to $3.48 billion. And research and development also increased, which is a good sign, from $785 million to $893 million. So they are spending more money on research and development, which is a good sign, which will lead them to developing better products in the future. As far as net income grew from $1.7 billion to $2.13 billion, or $2.14 billion for rounding up. So really good growth in net income. You did see some expanding margins for this company. They became more profitable overall, except revenue did slow a little bit in growth. Diluted earnings per share was $2.06 earnings per share. That got bumped up in this most recent quarter to $2.63 earnings per share. So pretty good growth in profitability. They did expand their margins, and they had a pretty nice growth in net income. So really good stuff here. They're not having a huge amount of growth in net revenue, but it is nice to see a company expand their margins. That is a really good sign for the stock. If we take a look at their balance sheet, cash and cash equivalents did decline some. So this is October 27, 2024 compared to April 27th, 2025. They had $8 billion in cash and cash equivalents. That decreased to $6.17 billion in cash and cash equivalents. So they did reduce their cash. So not the best sign in terms of the balance sheet, but it does look pretty healthy. They didn't have any sort of sharp increases in short-term debt. That remained completely flat, and long-term debt remained completely flat as well. It only increased by about a couple million. So that's okay there. Still, overall, it's looking pretty healthy with this stock. I'm not too worried about this balance sheet. This looks fine to me. It would be nice to see their cash go back higher, but this company does fluctuate a good bit in their cash and cash equivalents if you look at their previous earnings report. So not a huge cause of concern there. But if we go ahead and take a look at the valuation of this company, I think that's what's really attractive at this moment. Their valuation, PE, 12 trailing months or trailing 12 months, 23. Forward PE, you're looking at 21.75. So that's really solid stuff there. That is a great valuation for a company like this with very solid earnings. Price to sales, you're looking at 5.5. So overall, it's looking like a pretty good valuation in terms of PE as well as price to sales. I really do like where the stock is at. It's not overinflated by any means. Street analysts are giving it 3.88 out of 5, rating buy. Wall Street analysts 4.23 buy, and then quant you're getting 3.3 hold. So good stuff there. If we look at the 1-year forecast as well, median price prediction, you're looking at 4.68% upside, but a high end, you could get 31% growth. 36 analyst ratings, 72% buy, 28% hold, and 0% sell. I really like the setup of this chart in particular, though. This is potentially a buying opportunity. You can see the stock is up almost 22% over the past month. So we are getting some momentum with this stock. Over the past days, it's up. Past 5 days, it's up 3.6%. I do think this is a buying opportunity with this stock, especially considering the semiconductor industry booming, the cloud industry booming. Applied Materials definitely has an opportunity to grow here, and they could really catch some good tailwinds from the overall market trends, especially in the AI and cloud computing industry. So let me know your thoughts in the comments. If you got value from the video, subscribe to my channel. Y'all have a good one.